All right, let's talk about a company that had an absolutely blockbuster year, Lee Pressed Metal Industries. Now, these guys make really essential stuff. Components for everything from huge skyscrapers to those massive refrigerated containers that ship our food all over the world. And in 2025, their profits didn't just, grow, they more than doubled. So how does a company in a pretty traditional industry pull off that kind of crazy growth? Well, that's exactly what we're going to break down today.
So here's how we're going to tackle this. First, we'll hit you with the headline numbers, the stuff that really makes this a standout year. Then we'll put on our detective hats and decode that growth. Like, where did all this money actually come from? After that, we'll get into the real secret weapon, their profitability engine, because you're going to see it's not just about selling more stuff, it's about selling smarter. And finally, we'll look ahead, weighing the huge opportunities against some pretty real risks on the horizon.
Okay, let's get right into it with the big picture. And I've got to tell you, when I first saw the key number from their report, it made me do a double take.
There it is, a 102.7% increase in profit. Just let that sink in for a second. For every single dollar of profit they made last year, they made more than $2 this year. I mean, that's not just growth, that's an explosion. A number this big just screams the question, how in the world did they pull that off?
The story really starts the top line, with their total sales or revenue. And you can see it jumped by a very healthy 15.7%, up to almost 209 million Singapore dollars. That's a great sign, shows demand is high. But here's the puzzle, right? A 16% jump in sales doesn't get you a 103% explosion in profit all by itself. So this is our first clue that there's something way more interesting going on under the surface.
And boom, here's our next big clue. Just look at the gross profit. That's the money left over after you pay for the direct costs of making your products. It surged by almost 50%. So think about that. Sales are up 16%, but the profit from those sales grew 3 times faster. That tells us Lee wasn't just selling more, they were making a whole lot more money on every single thing they sold.
And this is what you get when you put it all together. You've got higher sales, plus much higher profitability on each of those sales, and it just sent their net profit into the stratosphere. It more than doubled, shooting up from $12.2 million to almost $25 million. That's the 102.7% we started with, an absolutely incredible performance.
Okay, so we've seen the jaw-dropping results. Now let's really dig into the why. Where exactly did this growth come from?
So according to their own report, the growth was really powered by 2 key engines. First, their construction business was super busy, supplying things like door frames and windows. Second, and this is a big one, they saw way higher demand from their reefer container business. Reefer is just short for refrigerated. We're talking about those high-tech, temperature-controlled boxes that carry everything from medicine to fresh fruit around the globe. And Lee makes critical aluminum parts for them.
And this chart just puts it all into perspective, doesn't it? The aluminum segment, which includes all those high-tech reefer parts, is the absolute giant here. It makes up nearly 2/3 of all their revenue. So it's pretty simple. When that part of the business booms, the whole company just soars. Their other segments like UPVC plastic products and steel are important too, but it's crystal clear that aluminum is the engine driving this whole train.
Okay, now this is where the story gets really good. We know sales were up, but we also saw that their profitability was up even more. This section is all about the how. It's about a smart, deliberate shift in their whole strategy. Before we jump in, let's just quickly get on the same page with a key term, gross profit margin. The easiest way to think about it is this. For every dollar in sales that comes in the door, how many cents are left over after you've paid for the raw materials and the labor to actually make the product? A higher margin just means you're a more efficient, more profitable business. It's a huge indicator of a company's health.
And here it is, straight from the company's mouth. This is the secret sauce. They say their margins got better because of that booming reefer container business, but also, and this is the genius part, a shift in product mix in construction. In plain English, they made a strategic choice to focus on selling more of their most profitable construction products. See, it's not just about selling more, it's about selling smarter.
And just look at the result of that smart strategy. Their gross profit margin leaped from 19.1% all the way up to 24.5%. That is a massive jump in efficiency. It means in 2025, for every $100 of stuff they sold, they kept an extra $5.40 as gross profit compared to the year before. And when you're selling over $200 million worth of products, well, that difference adds up incredibly fast. It's the main reason their net profit exploded.
So that was their incredible 2025. But what's next? What about the future? Let's pivot and take a look at the market and the opportunities that might be coming their way.
Well, the outlook for one of their key businesses looks amazing. The company points out that construction demand right in their home market of Singapore is growing like crazy. And we're not talking about a little bump here, we're talking about a boom, driven by major public projects. Since their construction business was such a big part of their 2025 success, this is like having a powerful wind at their backs.
And hey, this isn't just a hunch, it's backed up by some serious data. Singapore's Building and Construction Authority is forecasting that annual construction spending is going to average somewhere between $39 and $46 billion for the next few years. That just shows you the sheer scale of the market Namly is playing in. It points to a long period of high demand for exactly the kinds of things they sell.
But of course, no business forecast is all sunshine and rainbows. A smart company is always looking over its shoulder for potential challenges. So let's look at the headwinds that Namly themselves are keeping a close eye on.
You can really see the two sides of the coin here. On one side, you've got those amazing tailwinds, that powerful local construction boom, and the continued growth they expect in their main aluminum business. But on the other side, you've got the headwinds, and they're all global. Things like trade tensions, shaky financial markets, and economic uncertainty. These are the big factors they just can't control, and they could affect everything from the price of their raw materials to the demand for their exports.
So what's the game plan for that kind of environment? This is what Namly says they're going to do. It's all about focusing on what they can control. They're dialing in on managing costs, getting even more efficient, making sure their projects run on time, and just boosting productivity everywhere. It's the classic playbook for tough times. Get your own house in perfect order so you're strong enough to handle whatever the world throws at you.
And that really leaves us with the big final question, doesn't it? We have a company that just proved it can be incredibly profitable and efficient. They're looking at a booming local market that plays right into their strengths. But at the very same time, the global picture is shaky. Can that internal focus, that obsession with efficiency, be enough to shield them from those big external risks and keep this incredible run going? Well, that's the central challenge and the huge opportunity for Namly in the year ahead.